So hi and welcome to the Data Explorers Market Update with me, Will Duff Gordon. So today I'm talking about silver because silver is very much in the news after an incredible rally in silver followed by a bit of a collapse in it just recently when the Silver Futures Exchange announced they were raising their margin requirements. And this sort of ties in with a conference on the subject of ETFs because you can trade ETFs around silver, which is going on in Amsterdam at the moment, and also an optimized index that NASDAQ have launched using our data on the NASDAQ 100. But the interesting story is essentially I happen to have some friends who couldn't wait to tell me how much money they were making by putting their investments into the silver ETFs. And the silver, those people who missed gold, who were late to the party there, have no fear because silver was catching up and you could pay for your summer holidays and more by buying the leveraged silver ETFs. Happy days. The plain silver ETFs were up 30% this year, up until about the 27th of April. Meanwhile, if you were long the plain vanilla company like Fresnillo, the FTSE 100 silver miner, that was up, say, 10%. So you were making 3 times as much money if you were even in the unleveraged instrument, and you were taking no individual company risk. Excellent, people were saying. Now, if you felt, though, that, hang on, this discrepancy between a 30% return for the ETF and 10% for a silver company is an evidence of a bit of retail froth, what are you going to do? You're going to sell your silver holdings, or you're going to basically take out insurance in the options market, or you can short some silver ETFs. According to the gurus on CNBC in America, there was so much option activity, option contract going through on silver-related companies, silver-rated ETFs, that was more than all the options going through in relation to the S&P 500 ETF. So massive froth here, and everyone was predicting silver bubble. So again, what do? Well, you can start to short the iShares Silver Trust, or you could do the most brave thing, which would be to go long the leveraged silver ETF, which goes up when the price of silver goes down. It's called the ProShares Ultra Short Silver, ticker Z or ZSL. And amazingly, we saw some data on that because some of the institutional investors who lend their shares, they had a paltry zero, then they had 200,000 shares in the ProShares Short Silver, and then they had 1.5 million shares in it basically in the 2-week period we're talking about. So as silver goes down, they make money, which is very interesting. Was there some short interest in the plain silver, the SLV, the iShares Silver? Yes, there's short interest there too. So it's been a roller coaster ride. The people who are long the leveraged silver things are down 65%. Meanwhile, plain old Fresnillo is only down 7%, and so it's all kind of happening here. Now, some would say this is an incredible amount of noise, but others would say this is just a great bit of choice. Investors have a vast amount of choice to play with here, and choice normally leads to essentially a better, more efficient market. The other point to make is let's stress the difference between an ETF and an ETC. Exchange-traded funds typically replicate equities through sectors or through indices. ETCs are what these silver instruments really are, exchange-traded commodity funds. Somewhat different because they are probably not so physically hedged, whereas more of the ETFs are physically hedged because obviously they were using silver futures contracts to hedge many of the silver ETCs. So that's something people need to be aware of, and they probably are. Now, the other thing to say is that there's more transparency coming out, and Credit Suisse are now providing daily collateral transparency on what they hold as collateral against some of their ETFs. And what they're talking about yesterday at the Index Universe Conference in Amsterdam is very much, we're very happy to put out more transparency, more information, and make our products efficient to attract the investors. Now, finally, if you had the roller coaster ride over silver and you're suddenly realizing, wow, trading commodities is rather difficult, it may be a bit easier to simply buy Glencore on its IPO and leave commodity investing to the professionals. That is all I have to say. I've written a report about it. It is at dataexplorers.com/news.